You might be waiting for interest rates to go down to buy a home, but you might be losing money in the meantime. What if I told you that interest rates aren't the only factor in home affordability? And what if I also told you that by waiting to buy a home for interest rates to go down, you might actually pay more for that home? So I'm here with a good friend of mine, Rick Townsend. He's one of our senior loan officers here at Morgan Financial. Rick, thanks for joining us today.
Hey, thanks for having me, Joe. It's always a pleasure.
Awesome. So, Rick, tell me about home affordability and what determines home affordability.
Well, the two big factors are the cost of the property that you're buying and the
Right.
interest rate that you're going to be paying to purchase that.
Okay. Yeah. And have either of those things gone down in the recent history?
No, they have not.
Okay. That's a weird way of asking. I'm like, how do I ask this? But so you have interest rates and you have sales price, right?
Correct. Yes.
And interest rates obviously have gone up, and have prices gone up in the last year?
Prices have continued to go up as well.
But I'm confused. People tell me all the time, or I hear you telling me that the clients are saying, I'm going to wait to buy a home. What are they waiting for?
They're waiting for the rates to come down so that the house is more affordable, but not knowing that at the same time the house is appreciating and going up in value.
So by waiting, that's what I'm talking about. They're going to lose money.
They are going to lose money.
Now, what about the home prices? Aren't home prices going to come down too?
Not necessarily. In some markets they may, but down here in Brevard County, they're not.
Right. And so I look at this going, obviously people have that 2008 mentality where the whole market just got obliterated. But we have a completely different market. I mean, that market, there is about 4 times as many homes for listed. And there's about 30 million less people in the United States.
Correct.
I think you can fact check me on that, but it's somewhere almost a 10 to 12% increase in population.
Yeah.
So, but those two things, going back to the home affordability, if they're waiting for the rates to go down, you say that they're actually going to pay more for the house.
They're going to pay more because on average, if you think that the home's going to appreciate at about 6% per year on a $300,000 home, that's $18,000 per year.
Right.
So if you wait a year, it's now costing you $18,000 more. And if the rate doesn't go down and you still have to buy a house, now you still have the high rate that you didn't want, and you have a more expensive home.
Okay. And so on that note about rates coming down or rates staying the same, I know the Fed had their announcement recently, and while they kept the benchmark interest rate the same, they talked about having higher rates for longer.
Correct.
So if you're waiting, and we haven't seen any real, in this area, we haven't seen any real real data that suggests home prices are coming down. And I know Brevard County, we have like somewhere around 170, 180,000 more people than we did in 2008.
Yeah.
So, and I know the builders weren't building a lot of houses between 2008 and 2014, 2015.
Correct. Yeah, there was a ton of inventory available at that time.
Right. And the builders are like, why would we build houses? There's too many for sale as it is, and prices are going down. It's not profitable.
Correct.
And now they're trying to scramble. I shouldn't say scramble. They're all trying to build as fast as they can to help keep up with demand, and they can't do it.
Correct.
So, cool. As far as affordability, what advice do you have for people out there looking to buy homes now?
If you're in the market and you have to buy a home, now is definitely still the right time to do it. You can lock in the cost of your home, not have to worry about the appreciation affecting your purchase. All of a sudden, now you're going to start getting equity in your home, and when the time is right, you could refinance into a lower rate.
Right. And if the rates never go back down?
If the rates never go back down, then you've secured that equity in your property.
Right.
You paid less for it.
Good point. Yeah, I mean, rates go up, they go down. I mean, we had low interest rates for a very, very, very long time, like 15 years, 16 years. It stands to reason that what goes up or what goes down must go up, and what goes up must come down.
Correct. Everything changes.
That's very true. So what about other people? Like if they are going to buy the home now, as far as where should they be looking? Should they be thinking that interest rates are coming down, or what should they be thinking, or what process should be going through their head?
You have to go into the purchase knowing that the rate may not go down, and you can't count on the fact that 2 years from now I'm going to have a hard time making this payment. You have to be able to make sure that you're not going to feel house poor after making the purchase. 24, 36 months down the road.
Yeah, I hear this a lot. You can just refinance that down the road. A lot of loan officers are talking about, date the rate, marry the house, date the rate, or something like that.
I've heard that before too. Yeah.
And what do you say about that type of?
In theory, it makes sense, but there's too much going on out there to know exactly what's going to happen.
Right.
Yeah.
Yeah, there's a lot of mixed data. There's a lot of unforeseen things that could happen. So you got to make sure you're comfortable with the payment and the rate that you have in the house, because who knows when that might change. And I think rates will come down. It's a matter of time, but how much time, right?
Yeah, and by how much?
By how much. And no one really knows. We can make speculations and guesses. It makes sense, but who knows for sure. But in the meantime, make sure you're comfortable with that payment in that house. Now, I've also heard, sellers saying, look, I don't want to sell my house. I have like a 3% interest rate.
Correct. Yeah, but when you look on average, your average American consumer has, $90,000 to $100,000 in consumer debt that's non-mortgage related.
Right.
What are their interest rates on those?
Exactly. And they don't want to give up that 3%. But looking at the other debt they have, they could either do a cash out refinance at 7% or 7 or 8. I'm not quoting rates. There's no APRs here. But if they could go to a much higher interest rate, and they might actually have a better cash flow.
You may, especially like some of them are carrying multiple credit cards that have minimum payments. They have high interest rates. If you can consolidate all that debt in, you could very easily walk away saving a lot of money per month.
Yeah. Or if they really do need to move, but they feel handcuffed to their house because of the rate, they might actually sell their house, pay off all their debt, buy another house, even with a higher interest rate, and still enjoy a better overall cash flow.
Absolutely.
It's about looking at the entire situation.
Yes, and that's what we do with all of our clients. We just don't check the box and take orders when they come in. We sit down and look at all of their financial options.
Right. Because it's more than just, would you 30-year fixed rate? Would you like fries with that? Right. It's
correct.
It's let's take a look at the entire picture and see if we can better your position.
Absolutely.
And some people we can, and some we can't. Yeah. Cool. Well, good. What advice would you give to first-time home buyers out there right now shopping?
Definitely get with a realtor that has your best interest in mind, that has been working the business for a while, that know the ins and outs and can best position you in a transaction for seller concessions and things like that can help with your prepaid, your closing cost, or even buy your rate down.
Okay. Now talk about that. I hear a lot of people saying, well, I'd rather just get them to reduce the sales price.
Yeah. Well, if you reduce the sales price, say by $10,000, that may calculate into $20 or $30 per month. But if you do a permanent buy down with your rate using that same money, now all of a sudden you could drop that monthly payment $100, $200.
Right.
Which makes more sense than $20 to $30 a month. So
if you're a new home buyer going after a home, it might make sense to have the seller pay, or see if the seller will negotiate in some of the closing costs to be paid to help buy that rate down to get a way better payment.
Yes, sir. Correct.
Okay, cool. Well, good deal. Well, I don't know, anything else to add, buddy?
No, it's just that, what's going to happen is once those rates start to come down, you're going to see everybody, dive back into the market again, and you're going to have multiple offers. You're going to see people come in and ever asking price to win deals, and you just got to pick your poison.
Yeah. So right now there's an opportunity. Those higher rates are I think someone once told me it was the higher rate is the entry fee to more options.
Yes.
So as far as maybe it's closing costs, maybe it's a closing date that's important to you, maybe it's something else. But when the market changes and everyone rushes back in, those options won't probably not be available to buyers.
Correct.
So, okay, cool. And I know it's kind of cliche to say it's a great time to buy, but looking at what's coming, when and if those rates come down, or when and if this pent up demand, because that's what it is. If people are waiting, that demand it's not free flowing right now. And at some point that's going to break loose. And then all these people who say, I'm going to wait till the rates go down to buy, they're going to create a new frenzy.
They are.
Yeah. Yes. It's going to be very interesting.
When's the best time to plant a tree?
Yesterday.
30 years ago.
30 years ago.
Next best time, today.
Yeah, right.
Yeah, so go buy that house today.
Good point. Well, good, Rick. Thanks for joining us today. If you have any questions on what we're talking about, put them down below. We'd love to hear from you. We have some contact information for Mr. Rick Townsend here, mortgage loan originator here at Morgan Financial. If you found value in this or know someone who might benefit from it, please forward it along, share it, like it, subscribe, all these things, and we will see you next time. Thanks for joining us today, Rick.
Thank you, Joe. Appreciate it.
All right.